Hello everyone, and you're welcome back once again to LearnCity. So, in today's class, we are going to talk about the basic understanding behind American Depositary Receipt. I mean the ADRs. So, in going further in explaining it, we're going to talk about the types, the pricing, the fees, and the taxes attributed to it. So, let's get into the introduction behind American Depositary Receipt. First off, American Depositary Receipt, commonly referred to as the ADRs, and it often play a crucial role in facilitating international investment because they serve as a conduit for investors to access foreign companies' shares without having to navigate the complexities of foreign exchanges. Now, in this lecture, we are going to delve into the various facets of the ADRs, including their types, pricing, mechanism, and the associated fees and tax implications. So, having talked about this, let's go into the types of the American Depositary Receipt, the ADRs. Now, ADRs come in different types, each representing a distinct way for investors to engage with foreign currency. Number one is level 1 ADRs. The term level 1 ADRs are the most basic time, and it allows foreign companies to trade their shares on the US over the counter. The over the counter in this instance, I mean OTC markets. So they require minimal reporting and regulatory compliance, while they offer increased visibility and access to American investors. They do not raise capital directly. The second one is the level 2 ADRs. The level 2 ADRs require a higher level of reporting compared to level 1 that I mentioned earlier. These ADRs are listed to US stock exchanges such as the NYSE or the NASDAQ, NASDAQ. They enable foreign companies to raise capital by issuing new shares to American investors. The third one is the level 3 ADRs. Level 3 ADRs in this instance involve the most stringent reporting and disclosure requirements. They provide foreign companies with the opportunities to raise significant capital by issuing new shares to US investors. The level 3 ADRs are also listed on the US exchanges, and they offer the highest level of visibility. After talk about the types, let's go to the pricing of American Depositary Receipt. The pricing of ADRs, American Depositary Receipt, is influenced by various factors, including the underlying foreign company's performance, market conditions, and exchange rates. Let's now take them in turn. First one is conversion ratio. ADRs are often issued with a specific conversion ratio, which determines how many ADRs correspond to a single share of the foreign company's stocks. This ratio is crucial in understanding the relationship between the ADRs and the company's original shares. The next one is the market demand and supply. The market demand and supply dynamics of ADRs in the market is often play a crucial and significant role in their actual pricing. That is, if demand for the ADRs exceed supply, their prices can increase and vice versa to others' side. Let's talk about the fees associated with American Depositary Receipt, the ADRs, the fees associated. Investors should be aware of the fees that is associated with ADRs as they can impact overall returns. So let's take the first fee, which is depository bank fees. Depository banks fees facilitate the issuance and trading of the ADRs. They charge fees for their services. These fees may include issuance fees, custody fees for holding the foreign shares, and transaction fees for also buying or selling the ADRs. The next fee is currency conversion fees. Since ADRs are traded in the US dollars currency conversion fees, the conversion fee may apply when converting dividends or sales proceed from US dollars to investors' home currency. So that's all about the fees. Let's talk about the tax implications of American depository receipt. Let's talk about the tax implication of the ADRs. The taxation of ADRs can be complex and varies depending on the investor's country of residence and the type of ADRs. The first one is dividend withholding tax. In explaining this, foreign governments may withhold tax on dividends paid to ADR holders. However, many countries have tax treaties with the US. They can reduce or eliminate this withholding tax. The next one is capital gain tax. Capital gain tax may apply when an investor sells ADRs at a profit. The tax treatment depends on the holding period and the investor's tax jurisdiction. So that's all about the tax as related to ADRs. Let's now go to the concluding part of American depository receipt. Explained in this lecture earlier, the American depository receipts provide an avenue for investors to access foreign companies' shares while navigating the challenges of international investing. Now, with various types of catering to different needs, pricing influenced by conversion ratio and market dynamics, associated with the fees impacting returns, and tax implications to consider. ADRs demand careful evaluations as different investors venture into the global markets. A true understanding of ADRs is essential for making informed investment decisions. And to this, we come to the end of the lecture. I hope you gained something in understanding ADRs. If yes, let me know in the comment section in our next video. Thank you for watching. Remember to subscribe to LearnCity.